Hello everybody. So if you've been following me for a while, you know that on the channel I really like StoneCo and I really like HIMS. These are actually top positions for me, not as much as Tesla and Phase or Bitcoin, but they are very close to that. They're actually in my top 10 positions. HIMS is roughly 7% of my portfolio. StoneCo is about 4%, and in this range I also have CrowdStrike, I also have Mercado Libre. So these are my big positions for me. And of course, HIMS, I'm very happy. Yesterday, HIMS was up 12% after being up 35% a few days prior to that. But that also means that HIMS actually got a little more expensive. And it's a race on my channel to know which is the cheapest. Is it HIMS or is it StoneCo? And actually, right now, HIMS, so that's the current valuation of HIMS right here. And it's a 0.107 on enterprise value over gross profit over revenue growth. That answers the question, how much am I paying for that growth? Well, it is actually more expensive than StoneCo. The current valuation of StoneCo as I have it is 0.07. And of course, that number is based on revenue growth of 41%. Now, I always have someone in the comment section telling me, oh, it's 11% the revenue growth. But I actually looked it up. I think that person is using Simply Wall Street, and I don't know how Simply Wall Street calculates future revenue growth, but it's wrong for so many of the stocks that I look at. It's way below. I use the Seeking Alpha number, which I find much better. I think when I compare stocks, what's important is that I use the same tool every time, because each tool is going to have their own biases. But if the bias is randomly distributed, if the bias is roughly the same, then it makes sense, because it's me comparing my stock to other stocks with the exact same source. And so the source that I usually use for my forward revenue growth is Seeking Alpha. Seeking Alpha has StoneCo at 41%, so I'm using 41%. That's how I get to this number of 0.07. But if you were to be conservative and even assume that this is a company that grows at 30% revenue growth next 12 months, you still get a stock that is cheaper than HIMS, and you actually have to assume less than 28% revenue growth to find that StoneCo is more expensive than HIMS. And either way, we're nitpicking because both of these stocks right now are in the top 10% cheapest stock. What am I saying? Even the top 5% cheapest stock in my spreadsheet where I compare. I've compared maybe 50 different stocks, and it's all based on my research and my screening, and I have a bunch of screeners always open trying to look for cheap hyper growth stocks, deep value, high conviction, high growth types of stock. And HIMS and StoneCo put together, they are a meaningful portion of my portfolio. Now, this is going to be a reminder. If you've seen my coverage on StoneCo, you probably know this, but this is just, I'm doing this video as much for me as for my viewers who love StoneCo. I've been accumulating StoneCo because StoneCo was down 4% yesterday for no reason. I don't understand why this stock was down 4%. I'm very happy to be buying StoneCo in the $16-ish price range. StoneCo, you may know, stopped giving quarterly guidance in favor for Investor Day last year. And so in last November, they gave us in Investor Day with very interesting slides, very interesting guidance. So they estimate that their revenue pool, which is kind of their maximum amount of monetization they could get with their service, to be 100 billion reais. So that would be 20 billion USD in revenue pool. And they're going to get a lot of that revenue pool because they estimate that their take rate is going to be 2.7% in 2027. So a very large number of a transaction. And that, of course, take rate would then turn into revenue for that company. And keep in mind, they're also planning to lend again. And of course, you grow revenue as fast as you can when you lend money, because there's always people willing to borrow money. It's more of a matter of how much risk are they willing to get, and they're slowly dipping their toes back into the lending business. But that will be another catalyst for revenue growth. So if you use that revenue pool number towards the end of 2027, they've got it 100 billion reais or $20 billion. Right now, their trailing 12-month revenue is $2.27 billion in trailing 12-month revenue. Maximum would be 20 USD. So that would imply an 8x max in revenue by the year end 2027. Now, That's extremely bullish. I'm definitely not saying they will reach that. You know, they have competitors. They have PagSeguro. They have legacy banks. They have, for a side of their business, they have Mercado Libre for micro payments. They have competitors. I'm not saying that they will reach that. But given the size of that market, I have no issue imagining this company more than doubling revenue in 3 years. So is it 30 to 40% growth each year for the next 3 years? I have no issues imagining that. Hence, I have no problem using either Seeking Alpha's next 12-month revenue growth number of 41% or using kind of my own negative revenue growth number of 30% just by looking at this number and saying I have no issue imagining them doubling the revenue. And qualitatively, you know, the slide that they dropped on us on Investor Day is, I still need to make a thorough video about this. I've read them, you know, that's kind of my evening reading. I've read them multiple times. Fascinating. We get a lot of details. The best explanation that I can come up to summarize those slides to you is that they want to become the new bank for small and medium-sized businesses in Brazil. That's kind of what they want to become, the new bank for small and medium-sized businesses in Brazil. This is what they are right now. These are the services that they offer right now. And they want to offer, feel free to pause the video, they want to offer all of these services. They want to offer all of these. So they want to focus and provide banking, software, credit, payments to every single business but the large businesses, quite simply. And I like that target. They know exactly where they stand. And of course, the bulk of their business is medium and small size businesses, micro businesses. We know that not PagSeguro, but Mercado Libre, we know that Mercado Libre is thriving in micro businesses and kind of giving them a run for their money, a tough competitor. But the SMB space they are the leader in that SMB space, you know. And what does StoneCo do? Well, they do a lot of things. They do payment terminals, just like Square in the United States. But not just that, they acquired Links, which is a software company that helps them kind of act like a QuickBooks for the back end of these businesses. And they want to integrate and grow a point of sale business. They want to be an ERP system for your point of sale. And so that's going to integrate with your store, your inventory. I have no issue seeing them getting into websites in the future. They have receipts, payment systems, credit cards for the clients. You see, they have the Stone credit card for their clients with perks, all sorts of perks. And we know that Brazilians love credit cards, a web app, a phone app, a loan offer. You know, that's the same idea as Square, right? Because they have access exactly to the business and to the numbers of the business, and they know exactly how the business works. They can just give a loan to the business and then incorporate the loan payment in the take rate, and they add just something on top of the take rate, and the loan gets paid off seamlessly, and you can charge pretty nice interest rates for this company. So I see so much potential in Brazil, and I'm very happy with them just being in Brazil, because if you look at Nubank, Nubank is expanding to Mexico and Colombia, etc. But Nubank is still a mostly Brazilian business, and Brazil is a huge market. You know, it's about 2/3 the size of the United States. You know, that's big enough for me. This is a company that can clearly grow quite a bit. I have no issues imagining companies in Brazil in the future being 15, 20, maybe even $30 billion in market cap, right, within a 5-year period. This is a $5 billion market cap company. And so this will conclude, you know, of course, I use revenue growth. I'm a revenue snob. I'm a sales growth snob. But I realize other people in the financial world, they like to look at the bottom line. Now, I don't like when companies guide the bottom line as much, because I know companies can often manipulate the bottom line, and you can create fake earnings growth, for example, by buying back stock. If you buy back stocks, your earnings per share are going to grow because you reduced the amount of shares outstanding. And so you get into these sneaky ways where some companies, you know, they get into billions of dollars of debt to buy back their stock to make it seem like their earnings are growing. So, you know, I'm a little nitpicky and I prefer revenue growth. I believe revenue growth is the more flawless number, but in the case of StoneCo, as it is the case for many companies, they only guide earnings, right? They only guide bottom line growth. So if you look at the bottom line growth, as you look at their earnings, what did they guide towards the end of 2027? So adjusted net income, they're guiding 31% growth over the next 3 years, 31% each year in growth, in net income over the next 3 years. And so if I look at the number compared to what was just reported, that means that by the end of 2027, they are guiding us $860 million of net income by the end of 2027. So this is a business that is roughly trading at 4 times the net income of 2027. And the net income right now, as of Q3, which is the last report we have, we'll hear about them in mid-March, it's 202. So that's a 4x in net income. They're predicting a 4x in net income, and the current P ratio is about a 20x. So assuming that the P ratio remains at 20x by the end of 2027, early 2028, assuming that P ratio is still at 20x, then do you get a 4x in the stock? Theoretically, yes. Theoretically, that's what you do. The long-term growth for EPS forward, if you look at the analyst prediction, it's a 56% what they're predicting. If you look at the PEG ratio, which again I don't use, I use my metrics, which is EV over gross profit over revenue growth, but the PEG ratio is the same, is a similar calculation, but you're using earnings instead of using sales growth. If you look at the PEG ratio of StoneCo right now, it's 0.35. Anything under 1 for a PEG ratio is considered dirt cheap. So again, I find that this company is very inexpensive. If the stock price does not move and they actually achieve $860 million in net income by 2027 and the stock price doesn't move, that means you'll end up with a stock trading at 4 times earnings, which is impossible for a company growing that fast and in that hot space. You know, it's a hot space, the payment space. This is not, you're not talking about a dying mall store. 4x earnings would be a dying mall store. So eventually, I believe the stock market eventually, I believe will be a weighing machine. It will be a weighing machine, and they have 1.1 billion of cash on the balance sheet. Granted, they have quite a bit of debt too. I don't want to hide that fact. They do have some debt, but they have much more cash than debt, and they can use some of that cash to do buybacks. So right now they have a 206 million buyback authorization in place. So that would mean that if they spend it all, that's 4% of the float. So the more cash they earn, the more they're going to buy back their shares. So in other words, if that price ratio doesn't move up with the stock, they will force the price ratio to move up by buying back the float, which is kind of how Apple has been propping its stock price for so many years. So to me, this stock is a no-brainer. I love to own it very much, and at $16, I think it's a great price, and I keep buying it. And it's, like I said at the beginning, it's still too cheap, So this was not investment advice, no financial advice, just entertainment. I hope you were entertained. I appreciate your likes, appreciate your subscribes. Thank you for watching, and have a wonderful day.